All right, guys, welcome back to We Talk Money. And this is the bear market is over edition, right, guys?
2023 bull market's back, baby.
Hey, let's
Wind
go.
moon.
Let's just review the charts real quick. So, Bitcoin is up 14% on the year. Woo!
Best performing
NASDAQ,
asset.
yeah, NASDAQ up 4% on the year. Granted, we're only 12 days into the year, but yeah, let's go,
We'll
baby.
take it. We'll take it. We need the morale, the morale boost in 2023 after 2022. So we'll take it.
That's right. That's right. I mean, so I'll just pull up this tweet storm just to get us started. I tweeted this a few days ago, just talking about some of the mental game lessons I've learned about market cycles. And, I've just been seeing so much negativity and the market sentiment is at like peak fear levels, right? And so I just wanted to put this out there, showing the chart of Bitcoin, how it's back to multi-year kind of support prices. And I just did a little storm talking about how, it's really hard for people to buy when price is down a lot off all-time highs. The same is true for the stock market. And I think the most important thing that I wanted to say was this, how much do you buy in a bear market, right? This is the big question that we get both in crypto and also in stonks is, okay, prices are down. How much do you buy? And I think there's really only one answer. And that answer is that you buy an amount that you wouldn't freak out if price continued to crash, and you would still have some dry powder to buy if it went lower, but you would also buy an amount that you wouldn't have FOMO or fear of missing out if prices went up 10x, right? So basically, I think what people should do right now is find that middle ground. Say, okay, prices are down. I know buy low, sell high is smart. I don't know if this is the bottom. What's an amount that I can buy that I would still have dry powder if this wasn't the bottom? But if it went up from here, I would have enough on the table to make it worth it. What do you guys think of that?
I think it makes perfect sense. It's like we've always said, it's impossible to catch the exact bottom or the exact top most of the time, especially in something with volatility like Bitcoin. So you're kidding yourselves if you think you're going to exactly time it at the turn of every single cycle. And so I think what you've laid out makes a ton of sense. And I think we try to follow at least a somewhat similar path on the stock side where, we scale in and we define our levels using fundamentals and technicals, kind of a combination. And we figure out our line in the sand where we want to start accumulating. And we know that we're maybe going to be wrong and that it may go against us a little bit. We may be early. We also know that we may not get to a full position size before it starts to run. And so you just have to accept that and deal with that in various ways. And so I think the approach you've outlined is a really good one.
Awesome. Nick, has the NASDAQ and the S&P bottomed? I know there's some
Oh God.
people out there saying, who is this? Ed Yard Denny says, stocks are in the process of bottoming and the Fed won't raise rates as far as Powell suggested.
Yeah.
Is this true or not?
So we follow Yardini. He puts out amazing stock estimate data and just historical data that you can look at. And so that came out and it caught my eye because he basically said that the bottom is in and we're going to have a soft landing. And for anybody who doesn't know what a soft landing is, it's economic speak for basically we're not going to see a recession. We're not going to see turmoil in the economy, maybe a slowdown, but not a full-blown recession. And I've been talking about this possibility, I feel like, for a long time, and I've probably been discounted because everybody was doom and gloom and felt that wasn't going to be the case and we were going to see everything kind of burn to the ground. I think that there's still some concerns to look out for in this environment, especially the Fed keeping rates longer or higher for longer. But I do think, and as I look at the price action, looking at the price action, I can't help but kind of feel like we might have put in a bottom.
Ooh.
I mean, look, if you look at international stocks, price action looks strong on international stocks right now. Price action actually is weaker in U.S. stocks at the moment compared to international stocks. International stocks looks like they're actually going to break out and put in a higher low. So if the U.S. follows suit, then yeah, I would say the bottom is in, but I'm still keeping my idea of a choppy market in, like, I think that's still going to continue to be an issue. I think we're still going to, even if we break out here, and we have this trend line of resistance actually around in the ES, and a breakout is around 40, call it 4,100. And if we break
Yep.
above that trend line of resistance, yep, you got it there. If we break above that trend line of resistance, I think we're going to have a short squeeze. It could breathe new life into the price action to where the bottom is definitely in. We also could see that choppy, trappy price action where we stay above the lows of 2022, but we kind of just chop around and we don't really see a clear trend. So those are the two possibilities. And I think I'm leaning more towards the bottom is in. And I I don't know if I'd call it a soft landing, but I guess it's just like a what's it's close to a soft landing. It's still going to be tough, but I do think that we could end up continuing to just chug along and survive and not see complete doom and gloom.
And when you guys talk about like international, what do you think is a good barometer for that? I've got the EEM pulled up here. Is this a good one?
VXUS would probably be a better ETF to kind of represent that. That's the total international stock ETF. It's got a lot of developed stocks in it too.
Mm-hmm.
All eyes are on this China reopening, and I think that's what's breathing new life into international stocks.
Yeah, there's definitely an inverse head and shoulders here.
Yeah, I mean that looks pretty bullish. I mean,
Yeah.
it's tough, but I don't know. I can't. I'm not super bearish when I look at that.
Interesting. Yeah, I mean, look, the markets definitely took a beating last year. Prices had a pretty deep retracement, and seems like everybody was trying to front run the deep recession. And I think the counter trend play is the recovery play, or the unpopular play is the recovery play, right?
I do think that we could be in a situation where naturally so many people were positioning short or they're very short the market. And that is what I think could drive the momentum more so than the economy actually improving significantly. I think we could see short squeezes and
Yeah.
people get caught off guard by the price action.
We said last week, I said last week, don't get too bared up in the current environment. I said that for a
Yep.
couple of reasons. One, you got the China reopening really offsetting weakness elsewhere. Two, you had a lot of deep selling, not only all of last year for, better part of last year, but certainly towards the end of the year as well. Like we sold off pretty hard at the end of December. So we were due for a bounce regardless. You had everybody pretty bearish, but you had things like unemployment still super low, job market still holding in there at a level that I don't think anybody expected. I don't think anybody expected that by the time the Fed got over 4% Fed funds, that the unemployment rate would still be stuck at 3.5%, right? But that's where we are. And not only that, so not only do you have the China reopening, Chinese stocks in the US are already up 10% year to date. Now, today, in the last couple of days, you've seen a lot of short covering in stocks, even like junk stocks. I mean, Bed Bath Beyond is up like 100% in the last 2 or 3 sessions. So it was up
Yeah.
another 50% today.
On what,
Wait,
bankruptcy?
so are we going back into some meme stock territory here?
So
Woo!
I think that is maybe a very, very short-term phenomenon, because I do think you still have to be careful here. I think you have to pick your spots, and it's going to be a stock picker market, and you don't necessarily want to get back into the junk stocks that were doing well in an ultra low interest rate environment, because we will stay at relatively elevated rates for a little while. And there are still some concerns out there. Like when you look at the ISM manufacturing numbers, even the ISM services numbers rolled over for the first time last week. We have a few data points suggesting that the job market isn't quite as strong as it looks. Things like, job openings starting to slowly come down. Temporary workers, those have dropped off a cliff. So companies would first obviously cut any temp workers and things like that. They would move people maybe from full-time hours to part-time hours. We are starting to see that data show up. So that would suggest that maybe on a leading indicator basis, like the job market could be weakening a little bit. We still have corporate earnings to deal with. We're going to have like 30 or 40% of the S&P reporting the last week of January, first week of February. We get the big banks reporting Friday. So like, we're not out of the woods. It's not time, I think, to go like full YOLO into like all of the same names that were pumping in 2021. Plus you've already had a pretty big rally and stuff like Bed Bath, Wayfair, Carvana, Peloton. So I think you still want to tread a little bit carefully. Like, this economic environment is still not like totally bullish, totally clear. By the way, one other thing I'll mention here that is making things confusing for everyone: the bond market is still signaling that it thinks we are headed for recession, maybe not this quarter, but potentially 12, 18 months out, because the yield curve is so heavily inverted. Whether you look at the 2-year, 10-year spread, or the 3-month 10-year spread, like, they're at some of the most inverted levels they've been in 2 or 3 decades. And we've only seen inverted levels like this right before major economic downturns. So keep that in mind. Bond market is signaling something a little different than the equity market right now. And so I think you still need to be a little bit cautious. I said, don't get too bared up last week. I should probably say this week, don't get too bulled up.
Okay, so what do we do? Do you buy the low or not? That's the question, right? Like, is it like, is this dip buying territory, or is it like tread carefully and wait for more confirmation?
Yeah, I mean, I think you take advantage on, especially assets that you have long-term conviction in, where you still like the fundamentals and you can really underwrite the fundamentals. I think you do make sure that you have the exposure you want in case we do rip higher by 20% more. But at the same time, you don't want to like necessarily get overextended on super high risk trades. Maybe that could mean like, shit coins. It could mean some of these, bankruptcy plays. You can take those short-term trades, but just be careful to not get too overexposed, because this isn't going to be 2021 redux. Like, it is a different environment. We've got different conditions. So just be careful. We're not going immediately back towards 2021, I don't think.
Yeah, I agree. I mean, look, the mania that was 2021 has definitely slowed down. I think the hangover from that is still persistent, right? I mean, the FTX fallout, and we can talk about some recent news this week from that. But yeah, I don't think we just turn on a dime and go right back into shitcoin pumping territory. Just taking a look at Bitcoin, we did have kind of a short squeeze over the past couple of days. And yesterday was interesting because what I've been doing is comparing the Bitcoin daily to the NASDAQ. And it looks like Bitcoin is actually kind of leading, showing relative strength against the NASDAQ right now. Mm-hmm. Now, again, day by day, that's pretty random, unless we start to see, over the course of like a few weeks minimum, decorrelation. That's where I tend to get really excited, because that would actually show persistent capital flow into Bitcoin, regardless of what stocks are doing. And that's when you're in a quote unquote healthy market environment for Bitcoin and or crypto. And so this is kind of a good sign, but I don't think we're out of the gate with Bitcoin yet. This was kind of the first signal where we made a little bit of a higher high from the pivot high in mid-December. So as of right now, Bitcoin's trading just below 19K. And for me, I'm still, I like to zoom out and catch the major trends. What I would like to see is a break through 20K and then a pullback to start to get long again. Even though we have a close above trendline resistance and the 100-period moving average, which is held, 4 times over the past, 6 months or so. This could be the first sign of strength, but it also could be a bull trap, especially if stocks roll over from here. Because, as Nikki said, I mean, we're showing basically like a double or a triple bottom here in the NASDAQ, but we're not that far off of the lows, right? We're like 6 or 7% off the lows, and we're into resistance on equity. So if this rolls over in the next week and has a strong sell-off, I would expect Bitcoin to follow. Now, if stocks do sell off and Bitcoin holds up, that's a good sign for Bitcoin. But that's just yet to be seen. Bitcoin has followed equity weakness over the past year or two, and I expect that to be true until we have data that proves otherwise.
Well said. Are you looking at
Yeah.
anything like Monero or anything like that? Like there are a handful of things out there that have had some relative strength over the past few months. Probably not as much this week as BTC's kind of taken off, but are you looking at anything like that? Anything outside of Bitcoin? Like,
Yeah, there's a handful of smaller projects that have shown relative strength, like Fetch AI FET. You can see had a daily breakout, a 1, 2, 3, 4 pattern. This is one of the only charts though, and this could be a sign of early strength. I usually don't try to catch the first movers like this.
mm,
Um, I like whenever we go into what I call like popcorn season, where altcoins start to pop off, I'll keep them on watch. I'll look at my scanner here, like on Masari or other platforms that you can use to see which ones are on the gainers list, and then I'll look for persistent moves that are sustaining over several weeks. Right, that's what I want to trade. I want to
mhm.
catch the bigger moves. I don't want to be in and out, rapid fire here and there, some wins, some losses. That's how you just end up with death by 1,000 cuts. But yeah, there are a handful that are showing relative strength. I looked at Monero yesterday. To me, Monero is still just a choppy kind of garbage chart. I've got this kind of choppy zone mapped out. You can see the moving averages are kind of all over the place, volume's low. Monero is actually one of the only altcoins that I hold in cold storage, kind of long term, as some kind of hedge, I guess, if you want to call it that. But
Mhm.
pretty much everything else, I think there's still a lot of things that need to be culled from the ecosystem and that need to die that are just still obvious scams. But with that said, I mean, yeah, this is kind of an interesting time where we're seeing the first signs of life. And if the economy improves, and if the stock market starts to squeeze shorts, like you guys have been saying, there's a good potential for. I definitely think that Bitcoin could follow, and I would expect Bitcoin to go first, and then ETH and some other majors, and then finally, if you get sustained capital flow over several months, that's where we could have like another altcoin season. But I still just don't think we're there yet.
I wonder how much of that move in Bitcoin, because for wash sale rules, wash sale rules don't apply to crypto. So you can sell crypto losses and take the deduction and then buy it back. You can't do that in stocks. So as I was looking at that chart, I was like, I wonder how much of that was crypto people just selling their losses for the tax deduction and then buying it right back and getting that buying pressure. Just a random thought, but yeah.
Couldn't hurt, right?
Yeah, I mean,
It's probably
I'm sure it
contributing.
helped.
Yeah.
Yeah.
yeah, I mean, look, the Bitcoin price closed at basically the lows for the year, and yeah, it's no surprise to see it ramping up, kind of mid January. This actually kind of reminds me of, and I'm not saying this has to exactly follow, but if you look at Bitstamp's chart, which is one of the longest price histories, if we go back to 2015, this is what happened in 2015. Is coming off of 2014, we had a really extended bear market for over a year, and then in the first couple of weeks of 2015, we had a dump and a washout, and that actually turned out to be the low. We were buying here in the 180s. Did I know that was the low? No, but we had rules met for a trade setup. And then fast forward, we basically had a year of consolidation, aka accumulation range, and then by the end of the year it ramped up. So I'm almost thinking like there's a possibility that this could happen in 2023, where yeah, we do get a washout, or say we have some kind of trend change and shift in dynamics on the chart that could signal a low as well, and then maybe start to ramp up going into late 2023, early 2024 with the halving coming up.
The lesson in that chart is patience. Like the patience you
Yeah.
had to have to wait through that consolidation zone was rewarding if you stayed in it. Same
Oh
same
yeah. I
i-
mean
same idea applies today, right?
yeah. I mean, think about it. It was basically 9 months or more of just dead flat price action, right? And when you have 3, 6, 9, 12 months of flat price action in Bitcoin, a lot of people give up. They get bored. They lose confidence. They start seeking get rich quick opportunities other places. But in hindsight, those boring times are the most profitable times to plant seeds, right? There's a time for planting seeds, there's a time for harvesting profits. And unfortunately, the mass majority of people get bored or undisciplined and they leave during the most profitable times. So that's why I'm like banging this like a dead horse. Like, boring times are profitable times, right? Trade less, profit more. The boring times are when you need to stay locked in and stay focused.
Here, here.
Yeah. All right. Let's move on. Okay, what FTX shit do we have happening? FTX says it's located more than $5 billion in cash.
I don't
Okay,
know.
great.
There might be hope. There might be hope for some people to get something back from FTX. Probably not. I don't know, but that's what the FTX account holders are kind of sitting and waiting on, is how much of my money am I going to get back from this mess, if anything at all. So yeah, I think people that have money that got tied up in that, pay attention to that, because that's going to be all part of the process to see if you're going to recover any of your balance.
Well, guys, I have really good news. No matter what happens, if investors get their money back or not, the good news is that SBF launched a Substack newsletter. So
no, he didn't.
Yeah.
No, he did not.
He
How
did.
is he allowed? How?
Well, he's
How?
on bail right now, so he can do whatever he wants inside his house or whatever.
Yeah.
Unfreaking believable. This man doesn't know how to just shut his mouth and like stop. Just shh, just be quiet.
So I was thinking about this, right? This is either, whenever he got arrested, he was like doing all these interviews, or before he got arrested, actually, he was doing all these interviews and he was getting caught in lie after lie after lie. And I think this is just his attempt to show, how do you say it? Basically, like, intent, right? Like, he did not intend fraud. And maybe there's a little bit of like strategy here. I don't know if it's smart or not. I'm just saying, like, this is what I think the possibilities could be, where he's writing these newsletters, he's doing these interviews, just trying to show, like, hey guys, I made a mistake. I didn't intentionally steal from you. Maybe he's thinking like that's going to give him leniency in court. I don't know. What do you guys think of that?
I mean, listening to him, I was like, what is he doing? It just
Yeah.
made
It's
it
cringy.
worse. It made it worse. I don't know. Just my opinion.
Yeah, I think he's going to jail for a long time. I think I think when your co-conspirators roll over on you, it's going to make it really an uphill battle. So good luck to him.
True. I mean, for anybody that doesn't know, it was Caroline and then the other dude that basically pled guilty and are basically throwing him under the bus. And here's SBF saying he's not guilty on all charges. So it's gonna be a battle for sure. All right, let's do some Q&A. Nikki, I think you had some questions queued up from our Skill Incubator community, right?
Yeah, one of our Skill Incubator community members popped in chat a question that he wanted us to chat about. I think it's more of a question probably for Travis. I feel like he might be more well-versed on the topic. I could maybe chime in a little bit, but shoot with the question. Or do you want me to read it?
Yeah, go ahead and read it.
Okay. Well, it's kind of long, but let's see. So basically, Nick from the community said, recently I've read a couple of articles about a summit in December. Xi Jinping, am I saying that right?
There we go.
Attended in China. Obviously, China wants to buy oil from Saudi in yuan, but it seems like those talks rumors are becoming more prominent as of late. So China buying oil from Saudi in their currency.
In Chinese yuan. Yep.
Yeah, in yuan. So just curious, one, your guys' thoughts on whether or not that actually has the potential to happen. So let's start there. I mean, I don't see why it couldn't happen.
Yeah.
But Trav, I didn't know if you had thoughts on that.
Yeah, I think the broader question that they're getting at, which may be the second part of the question, is is the US dollar going to lose its status as the reserve currency as countries like Saudi and China work more closely together and start to transact in things like the oil market in a currency that's not the US dollar? So every year I hear and I see articles written about this, the coming end of the US dollar, why we should be ready for a currency collapse, why the US will lose its title as the #1 economy in the world, the #1 currency in the world. Yeah, it'll probably happen someday. But the thing is, it's not something we should be losing sleep over, because every year and every month, some article is written about why the US dollar is about to be dethroned. There's a couple of reasons why I don't think you should ever lie asleep at night worrying about this or doing anything super crazy financially to try to prepare for this. Because one, it would only happen gradually over many years. Two, the US economy is #1, not because people transact for crude in dollars. I mean, certainly that, maybe plays a tiny role. The US economy is #1 because US consumers have the most spending power in the world, and we're super capitalists. We love to buy stuff. We love to spend money. We love to start businesses. And the US has a ton of physical and intellectual resources. Like, we have a country of 300 million people. We also have a large land mass. So like, we have a ton of resources, and we are super aggressive as a capitalist society. So the US economy is #1 for a reason. That is not going away no matter what China and Russia decide to do from a transacting in a yuan currency perspective. The other thing to keep in mind here, particularly with this specific example of like the Saudis and the Chinese. So the Chinese yuan is like a horrible currency to ever replace the US dollar as a reserve currency. In fact, it's actually a terrible currency to even transact in because it has capital controls. It's fixed, by the way, to the dollar, as is the Saudi currency. So both of those currencies are actually fixed to the dollar. The Chinese bond market's still pretty shallow. So you don't have like a lot of capabilities. Like if you end up with a bunch of Chinese yuan, what are you going to do with it? You can't necessarily park it and earn yield in Chinese bonds. That's one of the big reasons why the dollar is so powerful, is like we have such developed capital markets that are free and open flowing without massive capital controls. The Chinese have the opposite. So while the Chinese and the Saudis probably want to work towards having some more transactions happening in yuan, it's really not feasible for the dollar to be replaced, even in that very specific example, much less the broader example of all the transactions that happen with the US dollar because the US economy is so big. So again, these headlines happen all the time. We hear about how the US dollar is going to collapse and how the US dollar will lose its status as a reserve currency, as if reserve currency is some status that's even given to something. Like, yesterday it was a reserve currency, tomorrow you're not the reserve currency. Like, that's not how it works, right? So like, this happens over many, many decades for many reasons, for many intertwined economic relationships. So please just don't lose sleep over headlines about the Chinese working with the Saudis to transact in yuan. It's not something that you should be losing sleep over.
Very well articulated, Trav. Awesome. And I did misspeak. The meeting was in Saudi Arabia. So,
and Riyadh,
but yeah. Well said.
But I mean, I think it's a valid concern though, right? Because like countries like Russia and China and Iran and like all these other places want to get out from under the thumb of the US government and the SWIFT system and all that stuff, right? So there is this like constant pressure and this constant motivation to get around those things. So I don't know, is there a scenario where something does happen overnight where it does cause like a loss in faith against the dollar, or just like a massive shift in power? Or do you see that as a super low probability thing that doesn't even have the possibility of a black swan event happening?
Well, I do think there is a black swan out there where the US could shoot itself in the foot by, say, like allowing itself to default on its debt somehow, right? I mean, it's a very, very low probability event, but we see like the political fight over the debt ceiling and things like that. That, by the way, will return again in 2023. Yay, because, we have a split Congress again. So we will see Congress trying to hold the other side hostage over budget negotiations and the debt ceiling and whatever else. And there is a small chance that, the US could like somehow miss an interest payment. Very, very unlikely. It's likely the Treasury or the Fed would pull some other levers to try to ensure that doesn't happen. But it is a possibility. And at least for a short amount of time in financial markets, I think it would create a real crisis. And so that would potentially accelerate things like countries trying to find a way to transact outside of the US dollar, for instance, and things like that. So that would be, that scenario is out there where something could happen overnight that could create a pretty big shift. We also saw last year what happened with the US sanctions on Russia, and that created concern. And that's why these talks are happening between the Saudis and the Chinese, because they're looking at what the US did with the Russia situation. And they said, well, they essentially, locked Russia out of SWIFT, or they created a situation where they put, sanctions on Russian assets. They froze assets of certain Russian billionaires. And so that is something that would be a concern for those countries. And so they do absolutely have an incentive, especially, like I said, over time, to try to transition out as many transactions as they can away from the dollar. But the reality remains that they're going to want dollars coming from the US. They're going to want, that direct investment. They're going to want consumers buying goods. And so they can't really avoid dollar transactions to a large extent. Now, I will say China, number 2 or number 3 largest economy in the world, like their share of transactions should continue to grow over time. And so they probably should be fighting to have more transactions denominated in their currency, but they also need to do a lot of work. Like I said, they need to open up their economy more. They need to float their currency. They need to remove some capital controls. And I don't know if that's going to happen anytime soon. So it's always a question of, when people talk about, oh, the dollar is so crappy and the US government's finances are so crappy, but we always talk about, well, relative to what? Like everybody else is also crappy, like all the other developed economies, right? Like the US is like the best house in a terrible neighborhood. So
I was actually thinking about this yesterday. I was flying, and whenever I was in the airport, I noticed in a coffee shop, the guy in front of me used a QR code payment in Thailand. And the interesting thing is he was using a Thai bank account, right? So he had an app with that just linked to Thai bot with a Thai bank account, and it scanned just like a Bitcoin transaction, right? It got me thinking about like how Asia is like leapfrogging credit card transactions. Like I did some research, and Asia is like 80%, QR code payments, and only 20% like debit or credit cards, where the US is kind of flipped. We're like mostly using credit and debit, and only 20% is like Apple Pay and stuff like that. And I was just thinking about how like it doesn't matter what the payment technology is, if it's a card or a QR code or a damn microchip in your wrist, you still want to think about like what is the asset that you're using, right? The technology is becoming the same for both fiat and crypto. Like with Bitcoin, the Bitcoin layer 1 transactions are pretty slow. It's like 10-minute block times and stuff like that. And that's why like the Lightning Network is coming out, and all these like layer 2 solutions and ETH competitors and stuff like that. And so I'm just thinking a lot about this and like, okay, where are we in 5 years? I think there's a big black swan event coming. I don't know when, I don't know what it looks like, but I wouldn't be surprised if something shakes that up, right? Like in China, everybody uses Alipay and they're using the yuan, Thailand, the baht, US, the dollar. Like when does Bitcoin or something else play a bigger role in that, if ever? I don't know. This is just where my mind is now.
yeah, it's interesting you mentioned Apple Pay, because it's something I've been thinking a lot about, and I don't think a lot of people are talking about yet, but they will be soon. Apple Pay is rapidly gaining share in mobile checkout. And so that train is not going to stop. If anything, it starts to speed up. And P2P is also possible with Apple Pay. My brother, a couple months ago, was when we were vacationing, he was sending me a bunch of payments, like when we would pay for stuff through Apple Pay. And at the time I was annoyed because I was like, just Venmo me or just PayPal me or just, whatever, some other way that we've been using. And instead, like he was sending me Apple Pay stuff and Apple Pay cash. And I was like, why do I need this? But he was just like texting me a payment basically.
Same, Trav. Same.
Yeah,
I
yeah.
literally, because we were together.
Yeah. But as I realized, as I started using like my now Apple pay cash balance to pay for stuff online and to pay for some transactions at some fast food places. I was like, oh, this user experience is super good. And I was like, this is actually native to like your browser that you already have on your phone. And like, if you attach, other payment stuff to it, like it becomes super powerful. So I was like, wow. And then it clicked for me. And then I saw some data recently that Apple Pay is picking up share, particularly in like mobile checkout. And so I'm like, man, Apple is developing another powerhouse business that like no one's even talking about yet. That's going to be another big business for Apple, super profitable. Yay, Apple. But what's interesting about it is like it's probably going to take significant share and like change the payment landscape. And so if that happens, like you start to get a little bit more leverage, and maybe, I don't know, maybe crypto could be a part of that as well. Elon's talked about doing something similar with like Twitter and micropayments. I think, yeah, there's a shift happening that like people are maybe not paying super close attention to yet, but there's definitely a shift happening. Like I think the payment landscape is going to look very different in 5 or 10 years, even in developed places like the US.
I agree
I mean,
1,000%.
Here's what I have a lot of conviction in is cash is going away, right? Like several years from now, nobody's going to be using cash anymore. The question is okay, what's the tech that's popular? Is it Apple Pay? Is it QR codes? Is it something else? I think credit cards are also going away. I think we've talked about this before, but I think rewards programs are bloated, and credit card transaction fees are bloated, and that's why you have credit card rewards, is because those fees are so high. And so I think there's fee compression in transactions. And again, the big question is, what is the currency that people are using? Is it Bitcoin? Is it fiat currency? Is it a stable coin? I think maybe there's room for stable coins in there, right? Because look, you don't want to hold all of your money or all of your net worth in fiat currency because you lose money to inflation. I also think it's irresponsible, and my God, Bitcoin maxis, please don't kill me for this, but I also think it's irresponsible to hold 100% of your net worth in Bitcoin. And I think it makes sense to have a stack of cash, be it fiat or stable coins or something that has lower volatility that you use for payments. And then there's, store of wealth, right? Which could be Bitcoin, where Bitcoin has an amazing compound annual growth rate over the past decade plus, right? So I don't know. I'm just thinking a lot about that. I'm trying to see, okay, well, here's where Asia's headed. Here's where the US is headed. We know the inflation narrative. We know the devaluing of currency narratives. I think something big is coming down the pipeline over the next few years. We're going to see big changes.
One of the big challenges, I think, for crypto is still the on-ramp problem. Like if you think about how most people like in the US get paid their salary, it goes to a bank account, it goes through direct deposit. And the link from the bank account to how you pay for everyday transactions is what's missing for crypto, because there are some services. Like I know some people use things like Strike. Yeah, Strike and one or two others, but it's pretty small in terms of its share. And so maybe it'll grow. I hope it'll grow. But basically, most people don't have a direct link from their bank account to like everyday transactions where crypto can like insert itself into that, because like your bank account will typically give you like a debit card or a credit card, and you'll either connect that to other payment stuff like Apple Pay or whatever, or you'll just use those cards. And that's how you spend the money from your bank account. So like there needs to be a way for crypto to kind of hook into that part of people's financial life so that they can do everyday transactions without having to go through fees on like exchanges that nobody trusts anymore.
Right.
It's also not very tax efficient to spend it regularly in your everyday life either, which could be a barrier to that happening. But maybe not. It was interesting. I did a bunch of pro bono financial planning sessions this past week, and somehow Bitcoin got brought up with every single person. And it's amazing.
Is it because they knew you were in Bitcoin, or was it just random?
It was a mix of that, and then talking about investments. It ended up getting brought up. But yeah, a mix of a few things, and it's amazing. We don't realize, because we're in it, how many Americans and just probably people around the globe still don't trust it and want nothing to do with it. Like, we deal every day with people that love Bitcoin. They have it in their portfolio. They think it's the future, yada, yada, yada. That's what we're exposed to. So sitting with these people, it was interesting hearing those perspectives, like, oh no, I would never touch that. Oh, that's scary. I don't trust it. It seems like a Ponzi scheme, or it seems like this. Like, there's a lot of people still that just aren't there. So I
Right.
think that could be very bullish for Bitcoin in the long run. The mass adoption still has so much runway to
Chris, you know
go.
what might be the thing that is the event that you're talking about might actually be the introduction of a CBDC in a country like the US, because I think in opposition to a CBDC, crypto would actually be a really compelling
Yep.
force, because CBDC comes with all those negative externalities, like the government getting to decide what transactions can and can't be done, and
Yeah.
shutting your bank account off if you say something that they don't like, right? All of those
Yep.
terrible things that we're already seeing in places like China. So
Yep.
I think if they successfully introduce a CBDC, a counter movement to that will actually be, hopefully, potentially, a big counter push from the crypto ecosystem. I don't know.
That's a great point. I mean,
Yeah.
yeah, like to Nikki's point about like people that are non-trusting of crypto today, right? Like, I don't blame them. Like, if people are not in it every day, and they're not educated on it, and they see the headlines from FTX and stuff like that, like, it makes sense that they don't trust it today. But like, to your point, Trav, like, let's fast forward a year from now, and let's say that China comes out and they do a mass rollout of a CBDC. Like, I know they've been doing small tests and stuff like that, but let's say overnight they're like, okay, this is the new shit. Like, you all have to do it. And then they do it, and then news comes out of like social credit scores and them like completely like wiping people out and taking all their money overnight, and then people going, oh, actually, you can't trust that. And then they go, why is Bitcoin valuable again? Oh, it's non-confiscatable, right? Like, you can truly, like, it's decentralized, nobody controls it. I think that would be a trigger for people to really get it. And then let's say after China did that Black Mirror stuff, the US was like, you know what, we're going to do that too. Yeah, I think people would be like, actually, let me go ahead and get a hardware wallet. Let me go ahead and get a peer-to-peer, DEX, decentralized exchange, or let me get into this in a more meaningful way. So yeah, I think you're right, man. That could be a huge push. Cool. All right. So I think we answered that as kind of the major question this week. What else is going on? Oh, India apparently is about to overtake China as the most populous country in the world pretty soon. I think they
Wow.
were saying, right? Like the next couple of weeks or something.
Yeah.
So the Indian people have been getting it on. They've been getting busy.
Well, they haven't been, I guess, there haven't been rules imposed on them like in China, right? Isn't that part of the
Yeah.
problem with
Yeah.
China's demographic, is all the rules that they put on the one-child policy and
Yep.
all of that?
And they removed that restriction, I think, recently, right? Or made some changes to it. But
Yeah.
as of, just looking at this chart, the latest data is like 2020. China's growth rate was 0.39% a year, where India's, even though it's falling still, it's still around 1%. So
Wow.
it's basically double that of China, at least from a couple of years ago, right? Who knows what it is exactly today, but yeah, I guess India is about to overtake China, and I think we said this over the past couple of shows. I'd much rather see India start to boom as an economy, because they have a democracy, and there's a lot of really smart people there, and there's mass opportunity for a really big middle class to rise there. So
Yeah.
that would be good to see.
Absolutely.
Cool. What else, guys? I know inflation. We can talk a little bit about CPI numbers that came out. I don't think we mentioned this yet, but yesterday, Thursday, numbers came out, and what was it? CPI is near 6.5, and core was what, 5.7?
That's right. Yeah. 6 straight month of deceleration or cooling in the CPI numbers. So that's what's given the market, this bullish push as well. And the probabilities now in the market for the next Fed meeting, which is end of January, I guess they make the official Fed decision about rates on February 1st. It's moved from like 35% chance of a 25 basis point hike to, I think now today, 92%. So the market is
93.2%.
yeah. So the market has quickly shifted towards saying that the Fed is going to be less aggressive at the next meeting. So it was priced more for a 50 basis point hike. Now the market's saying, oh, well, with the cooling CPI, it looks like now we're probably headed maybe for a 25. And there was a Fed member out today speaking, also saying that he favored 25 basis point hikes going forward. So it should be interesting to watch, but it looks like we could be nearing the end of the hike cycle, or at least, getting quite close, which is what I expected as well. I was looking at the calendar the other day, and I think one interesting thing as well is that, so we have this next Fed meeting on February 1st, essentially, and then we don't get another Fed meeting until late March. And the Fed will have 2 more CPI readings, 2 more jobs reports, and 2 more ISM manufacturing reports between the Fed first meeting and the late March meeting. So they're going to have a lot more data for that March meeting. So I think there's a decent chance the Fed could do nothing at the March meeting, especially if inflation continues to cool, beyond the February 1st meeting. So yeah, the trend is good. Obviously the numbers are still high and the Fed's still going to talk tough, but I think maybe February could be the last time we hike for a while. We'll see.
Interesting.
And couldn't that essentially support the stock market holding the lows? Because they're basically looking forward now. Like they see the light at the end of the tunnel and they're looking past into the Fed starting to decrease interest rates.
Yes.
Maybe not decrease interest rates right away, but they're basically like, okay, well, they're obviously not going to keep hiking. They're slowing down. They're in 2023, odds are they're going to stop hiking and they're going to chill. And I would think the market could hold up just on the fact of looking forward to that pivot where they do start to decrease interest rates.
I think
which maybe
so.
they don't. Maybe they just hold them for a while. But
yeah,
yeah.
I think so. I think you're right. I mean, I think the market will hold the lows unless one of two things happens. Unless we get a massive energy spike, which would obviously have implications for inflation going higher again, or two, earnings really start to roll over in a deep, deep way because we are heading into recession in a way that it happens quickly. So we'll see what Q4 earnings and what guidance for Q1 looks like here in the next couple of weeks. We're going to have a pretty good idea. So I think by, call it the second week of February, we'll probably know if the market's going to hold lows for a while. And yeah, earnings and recession worries will come to the forefront more so than concerns about the Fed, I think, by springtime frame.
And the more I research energy, the more it's hard not to get a little bullish on oil, which I hate because I want people to have more disposable income and I don't want energy prices to go higher because that's what, like you said, that's like the big wild card of the consumer holding up. But man, it's crazy when you start to dive into energy. It's almost like, how are we not going to see higher oil prices? I don't know.
Well,
Maybe that's a topic for another day, but it's definitely something I've been thinking about a lot more.
yeah, I'm not as bullish on crude. I think China is the X factor that I don't know how to account for with the Chinese reopening. It's hard for me to understand what the demand, incremental demand looks like from that. Obviously it will have a positive impact, but on the other side, like people say, oh, we're not growing oil production, yada, yada, yada. We actually are. If you look at the numbers, it's not at a super high rate, but like the US grew crude production last year, probably somewhere between 5 and 10%. When I look at a lot of the oil and gas majors and some of the E&Ps in the US and Canada, they are projecting at least a small increase in production for the 2023 on average. So like we're getting some production growth. The question, of course, is, well, what does demand grow? And if you have the economy weakening in North America, demand may not grow a whole lot. So the swing factor could be China. I don't exactly know how you price that. Another swing factor is always geopolitics, like what happens with Russia, what happens with places like Iran, Venezuela, things like that. But I can see a case for why crude doesn't rip higher if demand remains relatively muted ex China because of a weak economy, because like they are growing production. Like, yeah, after 2020, it's grown relatively slowly, but it is growing. Like production is growing. So I don't know.
to be determined.
Yeah, it's a really
Like I
tough
said,
market to figure out.
it's the wild card of what happens with markets right now.
Mm-hmm.
Okay,
So,
oh, go ahead, Chris.
oh no. I was just gonna say, like, I'll just keep this chart up as a kind of a future thing to keep in mind. Like, these are kind of the two things to look for. If the market doesn't hold up, it could likely be because of either an energy spike or earnings rollover deep in a bad way.
Yeah.
Okay, go for it, Nick.
I was gonna ask if we're excited about the TikTok ban on government phones for the Meta stock. Is this
Honestly,
the
I can't
beginning?
believe that I can't believe this is just happening recently. Like, you would think that would have been a thing that they banned a while ago. I don't know.
I'm with you there.
You would think, but is this the beginning of TikTok being banned altogether? What are the odds of that happening at this point?
How unpopular would that be, though? I think whatever party is in power is going to have a really hard time making that call.
Every Gen Zer on the planet would crumble to the ground crying, for sure.
Yeah.
I mean,
yeah, Democrats won't do it because they want the young vote. Republicans won't do it. Yeah, I don't know. Who does it? Nobody has the balls to do that.
You don't think Republicans would do it?
Republicans would be certainly more likely than the Democrats for sure.
Because they don't. Yeah, true. Good point.
But I think you're still right. I mean, like, I don't know if they would ultimately go that far, but they're probably at least probabilistically more likely to do it than Democrats. But yeah, I'm skeptical that it would get banned outright. You've also got Oracle in the mix. I'm sure they've got some lobbying dollars to throw around at it.
I bet you they all the government leaders, they probably have their government phones, no TikTok. They probably go home with their personal phones and scroll all night. They're like, this is amazing. They're probably all addicted to TikTok.
Talk about the perfect Trojan horse, right? Like, China's been caught like helping bring fentanyl into the U.S., increasing the drug problem. Here they are bringing another type of drug, which is just hyper addictive junk social media that they won't even let their own citizens consume, right? Like, they put controls on the type of content, the timing of social media. And here in the US, it's just like it's up to the parents to try to keep a grasp on it. And it's just destroying young minds everywhere.
And I can say, watching the parents that I know, it is a challenge of a lifetime. The TikTok stuff. I mean, they are truly I mean, I do Instagram Reels, and I'm addicted to Instagram Reels. I mean, every night you could scroll for hours on that thing. And TikTok, I hear, is like another beast that you just get sucked into. The algorithm is just so good. It's a challenge that parents are dealing with the social media for sure. From what I know.
Attention spans are shot,
Kudos
to anybody sticking with us on this show. That means you have an attention span longer than a frog. Or probably anybody under the age of 16 today. I don't know.
I just want TikTok to be banned because that'll help Meta stock.
Hey, Meta's up 50% from the bottom, at least the recent bottom.
Yeah, I mean, I'm long Meta. I'll admit it. Some people might think I'm crazy, but I'm long. I don't know. It'd be nice, but probably won't happen.
Yeah. All right, cool. Well, I guess to recap, all right, let's ban TikTok. Congratulations, India, on taking over the world. Inflation is no longer a threat.
I don't know if I'd say that.
Oh, man. The bottom is in for stocks or not. Bitcoin's about to shift into a bull market or not. Yeah, I don't know. I think this is, for me, look, we're making jokes. But for me, like, right now is not a time to anticipate anything. It's a time to have a plan to respond, to be reactionary to whatever happens, right? So for me, you just dip buying like crazy on Bitcoin? No, because we haven't had a dip recently. I will buy breakouts if price action holds up. But for now, I'm still being patient. What about you guys?
Yeah, I'm definitely continuing to be patient. What I'm probably going to be doing is looking more into the short-term trading side. So, like, I do think that there are going to be still a lot of trading opportunities to come on bounces, like you saw with Bed Bath and Beyond and things like that. So when I get back to stateside, I'm definitely going to be thinking about that. But this is definitely a market environment to keep the time frame shorter. You can't overstay your welcome trading this market, but I do think that there are going to be trading opportunities going forward if you know how to manage your trades well. I
Yeah.
also I still have cash on the sidelines that I haven't deployed into stocks yet, but fortunately, many stocks haven't really taken off. They're the opportunities are still there. Price action hasn't been super strong and momentous. So still plenty of time to keep doing research and keep honing in on my shopping list and get ready to deploy cash when the time feels right. Right now, I'm just kind of watching and waiting. I want to see how price action runs through resistance, if at all. I want to see if maybe, where we go in terms of the technicals on the S&P 500 and the NASDAQ, that resistance level we showed earlier. I'll be watching that very closely to see how price reacts to that. And that'll kind of help me make some decisions. But I'm definitely feeling closer to being ready to deploy some capital.
Nice. Trav, what about you, buddy?
It's great stock pickers market. Yeah, I'm not changing up the strategy too much. Made some great nibble buys in the last month or two when things were looking rough out there during tax loss selling season and stuff got punished. And, for me, just owning quality stuff that I can defend from valuation and business model standpoint, still have lots of cash like Nikki as well. And, earnings season will be key. Like I might actually start to remove some hedges if we get through earnings season and things look reasonable, if things look decent on, especially in the portfolio companies. So we'll see. Yeah, I'm definitely going to keep hunting. There's going to be some interesting M&A deals this year. So I'm looking for companies that are not only fundamentally doing well, but that might be some M&A targets, companies that are being super disciplined on the cost side. I think the market will reward those a lot this year. So yeah, but there's still going to be opportunities. I think there's still going to be a lot of stinkers during earnings season, companies that aren't cutting costs fast enough and not tightening their belt. Like there's still downside, and we're going to see like a lot of volatility and big moves. So I think, like I said, a stock pickers market, which I love.
Yes. So 2023, buckle up. A lot of volatility ahead, some recovery stuff, maybe some deep discounted washout buys.
Let's hope so,
Looking
baby.
forward to it. Yep.
Yeah.
It should be an active
Sweet.
year. It really should. I think 2023 is going 2023 will be an active year in the markets, I believe.
Yep.
From a trading and investing perspective.
Definitely.
2022, we were waiting, we were checking things out, kind of testing the waters, seeing what's up. And now 2023 will have a lot more clarity. Volatility will probably be traded a little easier. I feel like 2022, it was a little tricky. 2023 could give us better trading opportunities. So yeah, I'm looking forward to it.
Awesome. Yeah, me too, man. I know we're all going to be pumping out a lot more content individually, also on the show. Yeah, this is going to be a good year. Sweet.
Yeah,
well,
everybody's
guys,
going to get sick of us with all of our content we're putting out in 2023.
All right. Well, guys, thanks for all you do for the show, Nikki and Travis, and for you guys watching. Thanks for sticking with us through the good times, the bear markets, and everything in between. Go to wetalkmoney.com, submit a question for the show. If you go to wetalkmoney.com/community, you can check out our wealth building community, and also check out Nikki's YouTube channel, She Talks Finance, Travis's YouTube channel, Stock Geek TV, and he's going to be doing what, 2 or 3 videos a day this year?
Hey, a lot more than last year when I did, I think, a whopping 0 or 1. Yeah.
I don't know. How many did you do last year?
It might have been 0. It was not. It was not more than like 2 or 3. But this year, yeah, I'm going to resurrect Stock Geek TV on YouTube.
Yes.
It's happening.
So go and subscribe in anticipation of that. All right.
Yes, and don't forget at Chris Dunn TV. You didn't promote your own channel.
Who's that guy? I heard he's a scammer.
I don't know.
Yeah, Chris Dunn TV. Find me everywhere on social. Be careful. I have like 4,000 impersonators out there.
We all do. We all do.
Yeah. All right, guys, have a great one. Stay safe, stay profitable. Good luck and prosperity and all that in 2023, and we'll see you guys next time.
Cheers.